GM everyone. So I just want to share you this one today, and believe you me, this might be one of the best video you ever watch about liquidity. And I'm trying to make my page a page that teaches people more about cryptocurrency and price action. So for today, I'll be showing you how to identify high liquidity zones and why price move that way in respect to human token. So let's check this out. So the reason why I'm making this video is not to show you exactly how I make my analysis. I'm going to do that later on. But I just want to show you some little tips on how to mark strong and valid liquidity zones. Strong and valid liquidity zones, zones that will easily be taken out in the market. If you've been following my account for a long time now, you will notice why price is going down like this. Why price is going down this way? Because and where price is heading to. The the reason why you are a trader, the reason why you need to learn how to trade is for you to know where price is heading to and where price is going. If you don't know where price is heading to, you just be buying and selling anyhow. You just keep on losing opportunities. That is just how it works. You'll be losing opportunities because price always deceive people. That is what it does. It deceives people. It deceives you to take some make some decision. Then you begin to regret it later on. So I'll be showing you the kind of liquidity. Why we have different types of liquidity, but high probability liquidity zones that you need to be looking out for. If you see this zone, just know that you are about to cash out real quick. Now, this is it. Not that quick, but you're about to cash out. Now, look at this market. What is this market doing? Okay, let me delete this. I will show my community this. So let me delete this and start over again. So I will show my community. I did a video about liquidity last year, and I also did a video early this year. And what I said about liquidity was that price obeys FEG. If you don't know what FEG is, you are not a trader. And if you're a trader, you need to understand how to use it. FVG, fair value gap. All right, we call it fair value gap, FVG. Right now, we also have what they call swing high and swing low. Swing high and swing low. Swing high and swing low. This is what they taught us when we were learning crypto. When we were learning from every other platform and from every mentor out there, they taught us about swing high and swing low and fair value gap. It still work out though. Fair value gap is one thing that the market always creates. Okay, the market always creates fair value gap. The market always creates swing high and swing low. But there are other confluences they didn't show us. There are other confluences they didn't show us. And one of the reasons why they didn't show us this confluence is because it has not been formed. You see, one secret in trading, I don't know why but I just have to give you guys this, because no matter what, you are going to learn it either ways. People need to pay for this information, but I just need to give you guys. Market changes strategy. If I'm the first person you're hearing it from, then you're opportune to hear it. Market changes strategy. The first time I started trading, we were trading patterns, highs and lows, and it was working fine. Then later on, throughout the year, around 2023, the market begins to change from highs and lows to market structures and liquidity, ICT concepts. People begin to trade this. People begin to trade this. these market structures. People begin to trade this. Liquidity and structures. People begin to trade liquidity, inducement, breaker block, order block. Then later on, market changed. The market changed every season. Market change. You see a particular strategy, you see it to be playing out, time to time. Then in the next few um, year and months, you see another strategy begin to play out. Market change strategy. Just know that. But there's only one thing that is common, one thing that is certain. It's called liquidity. Liquidity. This is the only thing that is certain. Markets can never do without it. This is the reason why market is created in the first place. This is the reason why charts move in the first place. Liquidity. And I'm going to prove this liquidity strategy. I'm going to show you guys what to be looking out for. I'll be proving it with crypto. I'll also prove it with forex. It's just the same thing. It works the same way. Now, what time frame do you want to be looking at? You can look at the higher time frame, the weekly time frame, the monthly time frame. You can use those higher time frame depending on what you are trading and the how robust your account is. If you are trading 4 hours time frame in crypto, you are good. 4 hours time frame in crypto. Forget lower time frame in crypto. If you are trading forex, you can do with lower time frame, but I'm telling you, in crypto, go and check the higher picture, the bigger picture, because that is where the information is being displayed. Go to the 4 hours time frame. The 4 hours time frame is where you want to be taking your analysis from. Go and look at the market. Look at what the market is doing. Find those liquidity zones from the 4 hours time frame. Now look at my liquidity zone. I don't want to keep this video very long, but I'm going to show you something. Now look at this zone right here. What do you see right here? What did you see right here? Anytime you see something like this, market is moving this way. Market is moving like if market is going bearish, the market make a little bit bullish move, then little bearish move, 1 to 3 candles or even 4 candles, but usually 2 candles, either a pin bar and another little candle that has little momentum, or 3 momentum candlesticks. Then we have a stronger move that took it out. That zone is called a liquidity zone. That is what you want to be looking at. It is as simple as ABC. Alright, this zone is what you want to be looking at. It is called incomplete pullback. Now let me explain it well for you. Let me explain it again for you. Now we have this bearish movement right here. Now we have bullish move. Look at bullish momentum. Market begin to rise, and then we have this one, this bearish, 2 bearish candle. You can see 2 bearish candle. The next thing, market make incredible move upward. This becomes a liquidity zone. Now, especially this is where you need to be targeting. This become your zone. Any reversal trade, any reversal points, that zone. Now let me use a better view for you, so I can draw this chart very well for you guys. I don't want any distraction, so look at this. Alright, no distraction. If we have a pullback, a bearish pullback, then a bullish move, a small bearish move like this, small bearish move, then a stronger momentum. This zone, automatically this zone becomes a liquidity zone. Now, this is it. This is how you want to take your trade now. This is what you should be looking at. Look for a bearish confirmation. In a bullish market, you'll be looking for a bearish confirmation. Maybe a double top, triple top, bearish engulfing candle, anything, a trend line breakout from this zone, any bearish confirmation. And this is where you need to be targeting. You'll be targeting this zone because price will come back to this zone. And then you can take something like this. You can have something like this. Maybe you had a confirmation, something like this. You have a confirmation, something like this, and something like this, and this. This is it. This is just a concept. And it is very easy to spot. It works in everything, anything that have value liquidity. Forex and crypto. I repeat, forex and crypto. I don't do indices or stocks, so I don't know about them. So you can look at this one right here. Let's mark it out. Let's find something like this. A bearish candlestick, a little bullish, and a little two candle bearish, and a strong momentum became liquidity. And what happened around that zone? What happened? Let's see what happened around this zone. Let's see what happened around this zone. Price rejected from this zone, swept this liquidity. Now, for some of you that don't understand sweeping of liquidity, price does two things. When price reach a high, it does two things. It either raid it or sweeps it. If price is above any high, it will either raid it or it will sweep it. Let's say this is a high. Let's say this is a high, right? Sorry, I'm not drawing it straight, but just, do you know what? Let's do it this way. All right, this is a high. Let's say this is our high. It's our high, and we have another high right here. I think I'm gonna use my hand for this. So sorry guys. This is a sweep. You use pin bar. You can either sweep with pin bar. You can either sweep with pin bar like this. Sweep with pin bar, or little with body. Little with body. As long as the entire body is under more of the body, like in 100%, in the scale of 100%, 60% or 80% is inside the body of that candlestick. It's a sweep. And thirdly, the sweeping of this candlestick should push price downward. It shouldn't take price upward. If you take price upward, it is not sweep. The concept of sweeping, the reason why candles sweep is to push price in the other way around, is to push price the opposite direction. So if you have something like this, you can see like almost half of the candlestick is outside. Almost half of the candlestick is outside. Or you have some of this kind of candlestick that does like this, that do things like this. This is not sweep. You can't call this sweep. This is raid. It has raided it. And some people is going to trade it this way. Whenever they see something like this, whenever they see something like this, and price come down like this, there'll be a fair value gap right there. It's going to tap it and continue upward. It is not sweep. You can't call that sweep. It is raiding. All right. So this is what you just have this in mind. Anytime you see something like this, know that price is going to do this. So this is a sweep right here. This is a sweep. This one swept this. You understand? So how can you take this trade? A lot of people is gonna book it this way. Now we have this bearish engulfing candle closing below this pin. So we already know the price is going down, right? You can see this huge fair value gap that was created to push price upward, to sweep this zone, right? So it is going to be disrespected. So when price come back to this zone and close with full body candlestick below this fair value gap, we'll be looking for retracement around this zone. I'll take it and put your stop loss right here. Your take profit right here. You can see this makes sense, right? In the 4 hours time frame. And some people can also go ahead to go downward to take more understand. Some people is going to take more trades down here like this. They'll push it downward. So let me show you some kind of things. Now let's see how many times this plays out here. It plays out right here also. You can see from this zone, you can see a bullish momentum and a little bearish reversal, incomplete pullback that led to a stronger momentum. What are you going to do when you see something like this? You pick up your curve and mark it like this, right? Now we have to if you met the market at this point, at this zone, if you met the market at this particular zone, at this point, then you don't know what to do. Go and look for liquidity zone, this internal range liquidity zone. Fair value gap is not the only internal range liquidity zone. This is also an internal range liquidity zone, or you can call it low resistance. Just call it low resistance liquidity zone. Low resistance liquidity zone. When you have this your low resistance liquidity zone, look for low resistance liquidity zone, because that is where price is going to come to. Price is going to pick them one after the other, and you can pay attention to what price does at those levels. Pay attention to what price does at those levels. Price we give you, we either use a force like a very big strong candlestick, or it will reject with the pin bar. Like right here, reject with the pin bar. Yeah, it uses a strong bearish candlestick. So this is what price does around those levels. Price gives you like, I'm going to push downward, or I'm going to react to it, you understand? But price will definitely break those zones. It is just like a rule. It's just crypto rules, trading rules. So I'm still in Yuma. Yuma is a cryptocurrency. This is crypto, right? Let's go down. Let's see if we have something like this. Yeah, we have it right here. Okay. We also have it right here. Look at. I went to gym today, so my hand is a little bit shaking. My hand a little bit shaking, so I can't use my trackpad effectively. I hope this thing is still recording. Alright. So you can see we have another one right here, and a higher range, which is our fair value gap right here. This is our fair value gap. We have fair value gap right here. So that is why price is coming down. Price came down and took all this zone. Price came down and took all this zone. Let me mark this last one. This last one. Look at this last one right here. Some of you be wondering why are you marking these zones like this? Because those zones is, let me put it red. That's the last zone. Why are you picking out this zone instead of this zone? Some traders will pick out this zone. Some traders will pick out this lower zone. But me, I like going for something that is more, something that is real. You understand? A place that have more chance. You understand? So this place have more chance. We have more. It's more. I don't know how to put it. Price will easily reach that zone. Price will easily take out this zone before the other zone. Okay, price will easily take out this zone before this zone. That's why I like picking out this zone. And price will hit this zone first and react before coming down to this zone. And at some point, price doesn't even come down to this zone. So let's see. In this trade, let's see what happened. You can see price took out that zone. Price took out this zone. Then what happened when price took out the zone? Price went up to look for another liquidity level. Now remember what I told you guys about liquidity. It can happen in two places. It can happen in the lower in the lower side, which is the sell side. And it can also happen in the buy side. Okay, and also I don't want to use crypto terms or forex terms. I just want to use a normal slang. And if you want to look at liquidity in another way, what are you going to check out for? This in the sell side, we have two bearish. We have a swing low, then a little push upward, right? A little bullish push upward and two little bearish push downward. So if you want to be looking at it in the buy side, then you'll be using this, let me say, you'll be using inverse method. Now you want to look at a zone that has sell, which creates a low, and buy. Look at buy, right? And price will take it out. Look at price took this one out. Look at this zone. Okay, look at this one. Look at the sell and little buy. That's a liquidity zone. Sell. Okay, I'm not going to count this zone. I don't count this zone, but this one applied more, this one applied more, and we have fair value gap right here. So price will come back to it. So price came back to this zone. If you notice it very well, price came back to this zone to react at this zone. Look at the last liquidity zone we had. Price took out that liquidity zone right here. Price took it out. Then you can see it swept it. You can call this a liquidity sweep. Then the next thing, price came back down, and price is coming down to completely sweep this one. To completely sweep this one we are having right here, this one, and to react at this zone. So what are we going to be expecting? If you've been following up, if you've been following me up, I don't know, let me use my hand for this. you should be looking at this, reacting from this zone, then look at any reversal candle or reversal signal, something like double bottom, um bullish engulfing, or anything that have to do with reversal. Then it's going to break out and give and go up. And where do you think price is going next? Price is going back to the highest range, the highest range, which is at this zone. Price is going to take out all this zone. This is where price is going to come back to. So let's see if this same strategy applies to forex. So I'll be shooting another video, not to make this long. I'll be shooting another video, so you go and check that out. I'll make it a thread. All right, so this is for Yuma. I'll make another one for XAU. I'll make another for Euro. I'll make another for BTC. All right, so